5 minutes or so.
All right, we'll keep track of that data. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. He's joining us now. Gautam, good to have you with us here. Thank you very much. What's the most likely, probabilistically speaking, scenario from here out? I mean, a few days left for this year, but next few weeks, how are things likely? How are things looking from a Nifty and the Bank Nifty perspective?
Good morning, Prashant. Well, I think it's probably the trickiest scenario of the year. I think with what has happened in the last couple of weeks, it's been a very mysterious December. I've been tracking markets for the last couple of decades, and now with what mid caps and small caps have done in the last couple of weeks, I think it was quite baffling. And it was quite amazing that it was really India-centric, because Indian markets corrected quite a bit, but then the world was quite steady if you look at European markets, US markets, and even other Asian markets. So we've gone a little cautious and conservative at this point of time. We just want to take a step back and understand this setup better before we can actually take a call for the next 1 to 3 months. And I think, like most people, 18,100 clearly is an important resistance that we are working with. We need a close past the same to give that first confirmation that last week was just a one-off kind of a decline. And the ceiling on the upside is about 18,250. So I think broadly we are in that band of 17,800 to 18,250. I want to believe that what happened in the last couple of weeks was just one-off. It was pretty much forced selling, which will get absorbed quickly. But for that, I need concrete triggers on the charts. And if at any point of time 17,800 were to break on a closing basis, that would pretty much be game, set, and match to the bears. And then, maybe we get into a medium-term downtrend. So I want to maintain a positive stance, but then I just want to watch the price action over the next 1 week before I take that call. And as I said, I need some important resistance numbers to be clear to actually get back to the bullish phase.
Okay, so you're not quite sure whether the bullish phase will come back, but do you think that we can avoid some sort of a big bear market or a big collapse in the market? I mean, are you ruling that out entirely or not quite?
Well, it's too early to talk about a bear market because on the Nifty, we haven't really seen a very large correction. Let's not forget October and November was fabulous for Indian markets, particularly the large caps. And therefore, on the face of it, what happened in the last 2-3 weeks looks like a normal correction. But mid caps and small caps, just fell off the cliff. I mean, on an average, stocks fell anywhere between 20 to 40%, without any global market volatility. So it was a little unnerving, to be honest. And many setups that had developed over 6, 8, 10 months got disrupted just like that. So I think this is more of a new base building that the markets are going to see. Any which way, we live in a dynamic world, where COVID is always a scare all the time. And therefore, you really cannot comfortably go and do buy and hold in this kind of a market. So I want to be sector specific. I want to be stock specific. And I'm focusing more on the top 100 large caps at this point of time and just letting go of the mid cap, small caps just for the time being.
Right. The metals are extending their morning up move already. The metals index is at the high point, and what's also waking up right now is Reliance. Reliance has moved swiftly by about 15 odd rupees and has moved to the high point. So that ensures that the Nifty holds above that 18,100 mark. Gautam, you said you're staying away from mid caps, but yesterday the mid cap index actually saw a sharp reversal from the decline that we saw on Friday. In fact, if you add today's gains and yesterday's gains, we've nearly cleaned out the entire 1,200 point decline that we saw on Friday. What do you make of this up move? Do you think it's, again, just a flash in the pan, or is it sustaining?
Manglam, it's a tough call because, when the fall happened, it felt as if, nothing is going to survive. And now as you see this rise over the last couple of days, suddenly you feel that, oh, all is well. Why are we overreacting to this market decline? But I think, as I said, I want to take a slightly cautious stance here. Given what we've seen in the last 2.5 weeks, and January and February, we just have too much on our platter, whether it's earnings, the budget, and the global market developments, and the impact of possible, COVID that could come in over the next 2 to 2.5 weeks. So large caps is where safety is. At least you have the liquidity, you can get in, get out really, really fast. And I think the top 100 has really not been impacted so much in the last 1 month. So I know we've seen a good recovery in the mid caps and small caps. If you're a long-term investor, maybe this is a good time to top up. But if you're playing for the next 1 to 3 months, I would still go with the large caps.
We've just now fallen below the opening levels. The open was, just there, 18,089, and we are at 18,098. We did kind of fall below the opening levels, but holding 84 points, 18,098 is where we find ourselves at. Gautam, positionally, Are there any names? Because, I mean, trading in and out and being very, very rotational, I mean, experts can do it, but it's hard. It's easier said than done most times, and you described the current phase as especially tricky. Is there anything positional that you are comfortable with right now?
Yeah, I think we've been recommending to stay with the industry leaders. Stay with the best in business and you will survive these markets. I mean, if you look at the top sectors, the L&Ts of the world, the DLFs of the world, the Bharti Reliances of the world, the HDFC banks of the world, they have really not been impacted in this very ugly looking decline that we saw in the last 2.5 weeks. So even if it has to be in the mid caps and small caps, stay with the industry leaders and stay with the industry challengers. The moment you go level down, you have this risk of this market correction, triggering a large cascading effect on the downside. So that's what we've been recommending, that just staying with the top names really helps. Because again, I go back to this talk around COVID and the fact that, a lot of market participants say that was the reason for what happened to Indian markets in the last couple of weeks. But till global markets don't weaken, on the Dow, 32,500 is such an important level. It's where the 200-day exponential moving average is. So at some point of time, if 32,500 breaks, then you have a concern for the US markets. So as I said, I think stay with the big boys. I think that's where steadiness is and that's where outperformance is.
Yeah, right on cue. Look at the market, right? 50 points gone suddenly. I mean, I think this is a 15-minute, 10-minute candle maybe, and you'll be able to see that. We were up 80, 90 points, just comfortable, and just like that. Suddenly gone. This is like the last 15-minute candle of yesterday, where about 100 point. It was a 100-point candle, So this is quite something. The volatility is quite amazing. Futures, of course, are at a bit of a discount, 2.5 odd point. 14, 15 points now, but very fast-changing moves. But off the highs now significantly. Sorry.
I think also the volumes are on the lower side towards the end of the year. So, that kind of results in a lot of volatility as well. There's no definitive trend. You're seeing a bit of a pullback that's getting sold into. Maybe the real trend will emerge from the first week of Jan, as we were discussing, right? As you get more cues from earnings season.
Make that second, Sonia.
Second week of Jan. When people come back and you get cues in terms of earnings. And until then, I guess this, 18,000, 18,200 level would continue to be a bit of a hurdle. But I wanted your thoughts on two sectors, Gautam. One is, of course, IT and the kind of sell-off that we've seen in this year. Do you think it can extend into the new year? And within IT as well, wanted to talk a little more about, these companies that have exposure to sectors that are growing, like the auto-related IT plays, for example, that have been outperforming. How do you approach them?
Well, it might be a little contrarian to say, but I think IT is pretty much a safe haven because I think it's already seen a very large decline. Across the board, we've seen a fall of about 40-45%. In stocks which came out with fabulous earnings in the last few quarters. And I think 28,000 on the IT index for me is the line in the sand. And if it has to rebound, from current levels, then it should not really go too much below 28,000. And I think the downside is really not much if you really talk about the top line IT stocks or even the mid cap IT stocks. But then if you want to play momentum, IT is not the place to be in because it's been the punching bag in the last few months. And every time the Nifty is corrected, IT has come off. So I would be positive medium-term, long-term, and I would be neutral short-term. Short-term, I would rather play momentum, which is banks, which is capital goods, which is infrastructure. So those are the three pockets that we like. And even metals. I think metals have done quite well over the last 2.5 weeks. And I think 6,800 was the lifetime high for that index. If that number were to get crossed, you could see the next leg up. So it's a very difficult kind of a market scenario, something that I haven't seen in December. And therefore, you just want to, take it with a bit of caution.
You actually preempted my next question with regards to metals, Gautam, but just hang in there because the market's now selling off swiftly. The Nifty Bank has corrected about 400 points from the highs. The high on the Nifty Bank was a little over 42,900, and we also had a 20-day moving average, which was a little over 43,000. So just from those resistance levels, we've seen a bit of a dip on the Nifty Bank, led lower, of course, by its biggest weight, which is HDFC Bank. Swiftly corrected about 1% from the highs. The Nifty all but in the red right now, sitting in the green with just about 15 odd points. So that is something we are monitoring. Infosys is the other one which has taken the Nifty lower as well. We spotted Reliance as the one which was moving higher. That up move has also been sold into. So we'll monitor the situation as it goes. The only solace that we have right now is the mid-cap index continues to hold in the green. The market breadth still is favouring advances by a factor of 5:1. And the India VIX, which was down just about 1.5% yesterday, has collapsed about 6% in today's trading session. Gautam, coming back to you on the metals pack, yesterday we had some news from China as well. Prashant just pointed out that they've reduced the severity of fears in COVID. Now with China coming back, maybe there could be a gradual opening and then maybe a full-blown demand. Do you think metals have formed a bit of a bottom after, the big decline that we saw from the highs?
It's too early to say that. I think the metals index has lost about 500 points. However, certain stocks have held out really well. I mean, look at a JSW Steel. It's really not seen any correction in the last 2.5 weeks and is holding out well. But, we live in such a dynamic world. People talk about long-term investing and buy and hold, but the kind of world that we live in today, you don't know what's going to happen tomorrow. And, given what has happened in the month of December so far, so quickly and so abruptly, this is really a market where you have to be very, very cautious. This is not 2020, 2021 when you just bought and held on and you got a lovely trend over many weeks and many months. I don't think at 18,000, 18,500 index, you're going to get that. So metals again is high beta. It's difficult to say that it's found a bottom, but I think I would be very stock specific there, and JSW Steel for us is on top of our list. Other stocks are just too volatile. The Hindalcos, the Vedantas, and the Tata Steels of the world are just too volatile to be making serious commitments there.
Okay, all right, Gautam, great speaking with you. Thanks a lot for joining in. And if we were confused after your interaction, I'm confused a bit more. Because generally, you stick your neck out. I guess this time around, it doesn't look like it's quite directionless, the market, to be fair. So we'll wait until you get a fair view on what's happening. But for now, the market has slipped into the red.
Yeah.
So